Hello, and welcome to Delphian and DelphianTrading.com. Delphian had a seminar in Dallas, Texas, August 23rd through the 24th of 2019. Joshua Smithberger was the speaker at the seminar, and he is a trading strategist with Delphian. Sean Glover also assisted with the speaking, and he is a trading strategist with Delphian as well. Thanks for watching our videos.
Do the market direction. I'm going to knock on wood, I've been pretty good for like 3 months, so, no promises, so. So we'll look at SPX first. Alright, click SPX.
Just stuck over there.
Does everyone understand why we're only looking at two? Any questions about that? Why we don't look at, NASDAQ or something like that? I mean, you can always look at NASDAQ, but, the Dow, it's a state model. So, how many people here are familiar with state modeling? Raise your hand. Okay, so about half. So I'm going to have to go to the lowest level of person here that doesn't have an idea about state modeling. So I'll go through and explain that. Fire away questions, okay, if you have anything. So state modeling, it's an algorithm that Shook created. So I used a bunch of indicators for momentum in the stock. So every stock that we have is in a different state. So it's going to be in one of 8 states. So we have 4 bullish and 4 bearish. So like 1, 3, 5, 7, all the odd, those are green and bullish. And then the even 2, 4, 6, 8, red, those are bearish. So 1 is the most bullish, and then 8 is the most bearish. So, and as you go down, 2 is like the least bearish, and then 4, 6, 8. And we'll go through kind of the typical patterns. But at any point in time, depending on how, how the algorithm, the numbers that go in, it can go from one state to another. So it can go from 2 to 7. It can go from 1 to 8. Normally, it follows patterns, right? But, I mean, if you have an earnings event, it can go from 1 to like, 4 or something like that. So, the Shook made this just because it's very concrete. It tells you, okay, this is acting in a bullish manner. This is acting in a bearish manner. The predictions, generally, like system-wide, we give targets. We hit the first target about 65% of the time, system-wide through all the states. So not everything conforms to this algorithm, the model, as well as others, and that's why we backtest it. Some perform very well. They model real well, and some just are bad.
You don't throw out a percentage for T2 or T3.
It's less than 65. T3 might be like 20 or something like that, 20-ish, system-wide. So some states do better than others, because you have like, we'll get into it, but some like state 6 and state 3, they just don't occur that much, so but those are all calculated in with meeting criteria and things like that. So T1, I think generally if we get to the T1, we did our job. So okay.
I'm assuming some equities are more accurate in state modeling than others.
Yeah.
And I'm guessing you know that.
Oh yeah. Some are really, I mean, we'll go into it, but like, the base case for like anytime something transitions is, it'll, like for state 2, it's going to come down, meet target 2, and it's going to fall between kind of target 2 and 3 within like 9 days, and then kind of pop back up, depending on where it normally goes. So we tell you where it's going next generally. And those are just historical probabilities. So, since 07, 66% of the time when it went into state 2, it went back to state 1. And 33, it dropped further. So 2/3 of the time, it's going back up.
So in this case, so let's say you wanted to, it's in state 2, high probability goes back to state 1. So you want to sell a bull put spread. On this specific, this is an index, but you couldn't do it on the index or on the SPY, right?
Right.
How would I test the success of
That's
selling?
easy.
Okay.
We can do that. That's easy. We'll show you that down the road. But
So
that's
this
a
went,
sidetrack.
this
Yeah.
went bearish at 28.44,
Mhm.
and it got stopped, I guess you would have got stopped out, right?
Well, I mean, it depends how you trade it. Like, so, like when you're looking at this, you know, I don't really use the stops for stops. I use them as support and resistance. So like, when you look at everything here, you know, all these prices, these are all derived from a separate algorithm, and we just use those as support and resistance. If we go back, let's just go back to this day. The bearish is, some people have problems because it's going the opposite direction.
And just in case somebody doesn't know, since obviously the platform does back test and we can go back all the way to 2007, we can use this calendar piece here to actually go back in time and pull up different price points in, or dates in time
For
to-
every symbol.
for every symbol, and for the options as well, and for the indicators. So all you have to do is click on this little calendar button here, and you can go back all the way to 2007. So what Josh is having me do is take this back to when right before the S&P went into state 2. So I'm going to go back to this. Oh, sorry, just going to refresh real quick.
So this will tell you what state it was in before it went to 2?
Yes, sir.
Yeah.
So if I go back to this date here, which is August 2nd, I just click on the second here. And it worked otherwise as well, and I still do it to this day, is when I look at state modeling or I do a back test for a certain date range and I'm pulling up certain dates, like here, August 2nd, and if I get sidetracked and then I go type in Apple to see what it's doing today as of the close, obviously I'm still on the 2nd of August, so I might say, oh, that price doesn't even seem right, what happened, you know? So just be aware of that. Yeah, I do it all the time. Just be aware that that's a possibility if something looks askew. You might be looking at the wrong date.
Okay, so, you know, so the way you look at this is like base case, right? So on average, this thing is going up over 41 trading days, you know, 4.5%. So this is like a typical, like, this is what happens typically. It'll run up, first target, right? That's resistance. You see how it popped back down, and it ran back, got up through it, you know. So if you just kind of look at that, like here's the resistance from above and here's the support, and we'll go through more examples. It'll make things a lot easier to read on these charts. You know, if it drops off below right off the start, then this is my support. If it can't bounce off of here, then I'm out. You know, but if it can get down here and then, you know, like pop off. But you can kind of see why we're looking at this like resistance. I mean, so this is a whole separate algorithm, the targets. So we have an algorithm that, you know, tells you the momentum, which way the stock's moving. Then you have these targets. Oh, that's actually a shook.
That's a shook. Shook did that.
Someone back in the office.
Somebody did that. Not me.
Hey, just one suggestion.
Don't do that.
No. The way you got the software, can you label your screen? For example, this is, what do you call this view?
State modeling.
Okay, so can you put state modeling? Because one of the problems I had was, I saw a
You want
view,
a
I like the
title
view.
on everything?
What's
Yeah,
that?
A title.
A title,
Yeah,
because
good.
one of the problems I had was, oh, I like this view. Now, I don't remember how to get back to it.
Where am I?
What's that?
Where am I?
Where am I, right? So either you have,
We don't have that.
either you have a label or you know what I'm talking about with breadcrumbs.
Yeah.
You know, where you started here. and-
Trail, right.
A trail. So I found a view, and it was really hard in the software to remember how to get back.
That's tip of the iceberg. There's this backtesting section. It's really convoluted, and even if you had labels on that, it would be.
Well, the breadcrumbs would be really.
And it used to be, I mean, the backtesting before Josh and I started, it was a lot more difficult, right, to your point. And it's still, and we tried to do the wizards to make it a little bit easier, but there's still, and obviously getting feedback from you guys, and that's why we like to do these as well, is it helps us get information of, okay, well, maybe we should add that title page there because it does help you, you know? Because I do that too. I mean, I'll get some spots where Josh knows what he's doing. I'm like, hey, how do you do this? And I get there, and I'm like, all right, what did I do? You know.
But tomorrow after I've slept,
right.
can I get back there?
Right.
You have to know the name to get there on the menu over here. It's highlighted.
State modeling. So there's two ways you can look at state modeling. You have stock overview, which is not the same view, but similar. So I always go to state modeling to look at it. Stock overview gives you like financials, dividend, like events, things like that. As news, it's more of like a fundamental look. Stock overview. State modeling gives you this view. So that's where I always go. I don't even go to stock overview, really. Yeah.
I think that what I heard from a request down the table here is he'd like to declare this a style, which is some of the conventions within the brokerage houses. So he's got something set up that he likes to see it this way, name it so that he can call it back in.
Top, like we were talking about, it could be a grid.
Save your own grid, right.
Yeah.
Once I talk to the show.
I just once I get to a screen I just want to be able to get back to it.
Easily. Sure.
So I try the breadcrumbs or style or something.
Just write down the name, state modeling. That's where you got to go, state modeling.
Yeah, but
Your URL is showing you where you are.
Right, yeah, that's it, state analysis, yeah. Yeah, I mean,
Josh,
there's,
on the price action you were showing before, you made a point that it went up, hit that bottom green line as resistance, then it punched through resistance, and then subsequently it bounced back off of it. Did that
Yes.
upper line then become support?
correct. That's the way you think about it. Wherever this current price is, you got your support. Like this is huge support right here, that entry price. Like if it drops down below, you know, it's a warning, right? And if it gets low there, then, you know, and it holds below that bottom stop loss, then real problems, right? But, so that's, this is like an ideal situation. This, you know, pretty much like perfect on the days, like this is the average, everything, the predictions were money, right on. You know, we're 3029, 3000, 2798. So, you know, we missed it, you know, barely, but that's exactly what it's supposed to do. So it doesn't happen like that all the time, but that's what a majority of the time it looks like.
Would you call that last drop through support a breakdown? Would you sell on that? Or take profit on that?
I look at when it gets up to target 3. So if it can't break through there, and you know sometimes it'll take longer, but yeah, I mean the way I look at this, you know, especially once it comes down, like this is a big space, you know, and those drops they happen fast, right? I mean if you look at it, you know, it's like 280, so that's, you know, you look at the next state, but this is a big gap, so that's like a quick move. Once you see it's coming down, you know, you have that big space where it's going to fill in. You know,
Is the price get
that's an aggressive play, you know, trying to call the top. But when you look at this and then you look at the Russell, then you have a better idea and you can take a more calculate. Because, I mean, everything I'm looking, I'm trying to find confirmation. You know, like, okay, this, you know, it's up at T3. You know, it's not popping through. I'm looking for confirmations, like from, you know, Russell. I'm looking at, trying to find different things. I look at like Fibonacci stuff. Trying to find things to tell me, yes, your intuition's right. It's not going to pop through. You know, state modeling, the base case, it did exactly what happens. It runs up to, tries to get through target 3, and then, you know, it fails, comes back down. So,
yeah, I think
but that that's kind of roundabout, but
For me, state modeling is the thing that I've been really just using because I don't have a lot of time. I just look at it and see where the stuff is and then just decide whether to get in or not. So it's a very good feature for me. I'm not too much into back testing because that's a complicated area, but this one is very interesting.
well, I mean, everything, you know, this isn't like, you know, you walk into the system and you get it. You know, I mean, it takes some applications, practice, you have to do it. I mean, not, like state modeling, you don't have to do it a ton, but you have to look at it. I look at it every day, every trading day. Like the back testing, that's repetition. That's just like in the Army, you're field stripping a weapon. You just got to do it over and over again, then you'll get it. Like, so, but there's a learning curve with the back testing. You know, obviously there's a learning. This is new. There's nothing else out there like this available to the public with state modeling. You know, they should create it out of its genius mind. So. So there's a little learning curve, and, you know, like I've been in this for like 3 years, so obviously I have a lot more, you know, trying to apply this, trying to find ways to, you know, get better trades out of it. You know, that's where we developed the studies, and from there, you know, we just started just lining these up with like support and resistance. Because, I mean, how many times did I see it do this kind of action, and I'm like, you know, I start applying it as support and resistance, so. And it made a lot more sense to me.
If I pull back 8 days from that current one.
From the entry here?
No, from the
end, yes.
last day,
Yeah.
pull back 8 days, what does this chart look like at say 8 days
It's
back?
gonna be the same, except you're just gonna not see these portions here, but I'll go there to, let's just do the 24.
So the support and resistance isn't redefined.
No. No, that's, while it's in that state, it'll reset if it moves, when it goes to state 2, you'll get new stuff. But this stays, and we just say, okay, how do we do on our predictions? We just track it.
That's a good question, because we know software providers that massage what they're showing today,
Yeah.
it's not the same thing they showed you yesterday.
Tweak it a little.
Right, and then to Bob's point earlier, I mean, asking about support and resistance, right? Once it kind of bounces off that T2 right there, if I can see it at this particular point on this day, then if I'm not out of the position completely, I might say, okay, well, let me just use that T2 as my stop to completely get out, because it's kind of held that area. It might want to run a little bit higher, but as you saw, you know, 5, 6, 7 days later, it actually broke through it. So I kind of use that as possibly my next support. You know, that T3 again is that resistance area, but that T2 now is my support, and if I'm still in a position, I'll probably have that as my stop. You know, just
If you were on an option, you'd be happy to take whatever that's
That's right.
giving you on 3.5% on
Yeah.
the underlying.
yeah, I would probably be already out on my long call if I was in there. I usually typically, because I do have experience doing the futures and the options, you know, my typical way of doing it is I usually try to buy at least 4 more of the options when I'm getting into a position. So in a case like this, I would have at least 4 of the calls, and I'd probably already be out of 3 for a profit on the whole thing. And then the last one, I would probably use that T2 as my stop. If it broke below it, I would just get out, but I would probably hold it and to see if that market continued to go higher. You know, so that's
So that T3 is represented above that 3,000, that's the,
that.
3029,
Yes, sir.
that's, that is that line.
Right.
Yeah.
That's this line right here.
Yeah, they all
That is that
correspond.
one, okay.
These targets and stop losses are charted over here.
Right there.
So like the most important, obviously, entry price, very important, target 3, very important as resistance, and then, you know, these are usually globed together, unless it's like a very volatile stock, then you get them spread out, but, you know, I just use like, you know, I just usually clump them together and like, okay, if it can,
So the targets
add
and
support,
the targets and the stops don't change until the state changes.
correct.
That's correct. So all the way, I was going to show you that. So this is that August 2nd again. So from start, which I think was what, August, so June 12th. So all the way from when it started into state 1 on June 12th
all the way until today, or August 2nd, excuse me, these prices nor these stop loss prices on the chart have changed. The only thing that's changed is your price action on the SPX.
And how are the targets computed? Is that some type of ATR or?
We don't have.
You don't know?
No, I have an inkling. It's a separate algorithm. So it's a combination of things. So
Might be pivots.
he's looking at like Fibonacci, partially. He's looking at historically, because we know, it's been in state one, and he goes back before '07 to, so we know on average what happens. So it adjusts over time as things change. But we know generally, here, like these are set based off of experience, and then also other factors like, Fibonacci, other types of things. So there's a bunch into it, and they're pretty good. So.
And to Josh's point too, I mean, you can see when it went into state one, the average days is 41 and 4.57. Now, since it's in state one now, and the average days are less, and the percentage should be a little bit the same based on that. But next time it goes into state one, these numbers should adjust a little bit based on what happened previously. So it kind of takes in those averages. Is that correct assumption?
Correct. Yeah.
You can't put your cursor over this historic data and tell what state it's in.
Over here.
You can scroll all the way down.
Yeah, move the date back to the date.
Yeah, and we can go
But you
back
have to move the date first.
Right.
Yeah,
Just to
but
see
you
it,
can
right?
look-
But you can
looks
see
like a
here.
good-
Oh, you could look at that map.
Right.
Yeah,
Right.
and you can zoom in down here.
Okay.
And look, so, okay, I guess going back to, like, state modeling, like, typically, when things are coming off, going down to a bottom, you get a 2, 4, 8, so it doesn't really get into 6 much. Then off the bottom, this is exactly what, 7, 5, 1, so that doesn't happen all the time. So sometimes it'll go 7 and get into 5, and then it'll chop along in the middle. So those middle states are kind of like chopped. Market doesn't know the direction. It knows the direction if it's in the most bullish state 1. It knows the direction if it's in state 8. We're not always going to get these massive moves. Like you'll get a few false signals on state 1, but you're not going to miss these on state 1. These big, large moves up, and it's not going to have sustained drops over time unless it's in state 8. Like you don't miss those, but you'll get occasionally some false signals. Go ahead.
This is another part too where I was talking about the date. You can see my date ends on August 2nd here. If I was wanting to look at a real chart, I'd be like, why isn't this showing me all the way to the date? That's because I'm still on that August 2nd date.
Yeah. So what we're going to do, we're just going to go back through time. We'll look at SPX. Different examples, I think that's the best way. So if we go back to here, before 1 and the state 1. Any questions so far? Just keep them coming. Fire away.
We're trying to figure out if state modeling is the holy grail. We're all
Yeah.
here for the holy grail.
The Holy Grail? No.
Definitely is.
It's not the Holy Grail. It is. It's useful. It's very useful.
You hear this term curve fitting as a pejorative. This is curve fitting.
It's more than that.
Yeah.
Is
It's
it?
way more than that. It has curve fitting in it. That's like the machine learning.
But you have
part.
a finite amount of data, and you're assuming that it's always, within a confidence level, repeat itself.
Right.
But that's the problem with using it.
So you're not going to, it's not going to always,
No. You have a
There isn't-
60%,
There isn't a holy grail.
no.
right.
So on state modeling, can you add seasonality, kind of like buy in November and sell in May or whatever?
Not, you can look, we have a seasonality screener, but, where you can like add in state modeling, but it's not factored into the, the algorithm.
What I liked when I first heard Ashok's talk, he had this opening declarative statement, what do you know?
Right.
You don't know anything else, but you know what this data did, and that's all you know.
Mhm.
So
Sure.
he took a lot of stock in that.
Yeah. So, you know, so anytime you look at this, just think of support and resistance, right? And it tells you where you should be looking. So normally in state 2, it'll come down here and then kind of either fall off or pop up. So it ran right up to stop losses and then tried again and then fell all the way down to the target, target 3. So most of our studies, we're looking for when it goes into, hits that target down here and then it'll bounce off. That's like the majority of our studies. So when we see SPX to that, we know this is like an inflection point when it gets down here. But, you know, it gives you daily where you're looking for, you know, market direction. It gives you the bias, like where it's going. Okay, it's holding off the entry price, which is, you know, bullish support, runs up, and then we're watching that stop losses, right? And then it comes down, breaks through that entry price. Once it gets through that entry price, we expect it to go run down and try and get to the target 3. It got through it, but bounced off, ran all the way up above the stop losses, and then went into state 1. So we're in a similar type of situation. It hasn't run down the target 3 yet, but we're in a similar type of state 2 now. These aren't as, because it's such small moves, you know, these are more range bound. You think of state 2 as a pullback. So like bullish stocks, you know, like Amazon, they go 1 and then 2. Like they run up in state 1 and then they do a little pullback in 2 and then a 1, 2, 1, 2, 1, 2. Those are what the bullish stocks do. The bearish ones do the opposite. 8, 7. 7's like the pull. 8, 7, 8, 7. So SPX, you know, it's been bullish. So it's been doing 1, 2s, 1, 2s. So that's what we try and pick off those 2s for entry points. So that's what I told, because we were meeting weekly at that time, and I'm like, this is, you know, this is what the studies is about. You know, like a lot of these are based off of this hitting that target 3, and then the thing like catapulting up, and that's exactly what it did. But we can go back. Questions on that? I mean, this is it. These, so it's like the ranges, you know, they're very tight, so you just have to give it a little extra leeway. Go ahead.
So this is state 2, where the big 2 is up there?
Yeah, state 2. Yeah, over here it tells you where the state, the day that enter, the entry price, the averages.
So would you have stopped out and closed your position, or would you have just watched it? Fourth day into the trade.
Well, at first point, you know, I wouldn't do anything day 1, but you just see where it breaks. I look to see where it breaks.
Say it's fallen back to.
But I'm not trading state 2, like entry. I'm looking for where, you know, which way it's going to break and bounce off of. That's what I look for state 2. Because you can get pretty big swings quickly. You know, it's fairly volatile. Yeah.
2 questions. Number 1, can this chart show where the state changes are underneath that particular day?
Well, this is the day transition right here.
I appreciate that. But if I'm looking at 5 days out,
Yeah.
and is there a way to tell when it changed state?
I don't understand.
If I'm 5 days forward from
Yeah.
this state change,
Right here.
okay, how do I know at that point when the state changed?
Show them the bottom chart.
The bottom chart.
The bottom chart.
Yeah, the bottom chart shows you the whole, oh, sorry. So if you're 5 days forward, you'll be looking at about right here or so.
But why can't you just put a state number
Well, nothing,
on that day?
there's nothing that's changed. So these are
Yeah,
the only
that's
days
the
that the
entry
state's
day.
changed.
So until it transitions, so it entered 7, so it's from 7 until 5, 5 until 1, 1 until 2. That's
Can't those
one.
numbers be on the other chart?
They are.
Which, if they're in the range?
There's nothing here that has changed so far. Once it entered into state 2 here, it's still in state 2 this whole way through.
Yeah.
That's all state 2 right there.
Yeah, so whatever day, that's the current state. That'll stay until,
Does that make sense?
I'm not sure you're gaining my question. If I come into this and it's showing me state 2, and I'm 5 days into the state 2, how do I know when it changed?
Oh,
right up here,
I'll show you. I'll go to 5 days past when it
that's
changed.
the day it changed.
Maybe.
Graphically, could you show the state?
It does
the
show,
day
it's
of
got the dotted line.
Yeah, it's
The dotted line.
So it's transitioned into state 2 on May 13th, and I'm showing you May 17th now. So this is the current day here.
Okay.
If we're
The answer was the dotted line.
the dotted line, yes, sir. This one here. Yes.
Yeah, that's dotted line, and it tells you the day of transition.
The second question is, how fine a history file do you have, especially for options?
Oh, what?
How fine of a history file do you have for options?
What do you mean, fine?
end of the,
End of day.
Yeah, it's in the day right now since '07. We have 20-minute data, it's just a matter of the servers. They're working on the servers. So we'll have 20-minute data soon.
The whole other information, yeah.
Yeah, but I don't think we'll go shorter than that in the near future.
Josh,
It's expensive.
are there, the red up above, the horizontal, are there 3 distinct lines there? I can't see it.
No, right, I mean, they're supposed to be.
They're supposed to be,
Yeah,
that's
but
okay.
They're so tight together.
They're so tight.
It's so tight, yeah, because
Yes, they are.
Okay,
yeah, you 2
no, but
point,
that's okay, I get that, yeah.
yeah, because you're talking 2 point.
Yeah,
So there's always supposed to be 3 lines up and 3 lines down,
Correct.
depending on the direction.
You're
I mean, you can think of this like a rubber band, you know, it's either gonna break or bounce.
And you made, I think you made a very distinct point that you're treating this as support and resistance. You're not taking the stop loss indicated line as the point at which you're going to stop loss.
Yeah, oh, I'm not entering it. Yeah. This-
But if you're,
this
if it were,
move-
if it
I'm
were,
a risk reward, you know, maybe moves 2%, like, I'm looking for more risk reward where it gets up to the stop and I think it's gonna bounce. You know, run down, or if it gets down to the target and I think it's gonna bounce off that. You know, I'm not, you know, state entry, it comes in there, you know, it can go either way, at the beginning. So I'm not, and it's only 2% like big move, so I'm not really playing that from the get-go. You know, I look for opportunities.
In this case, the state wouldn't change even if you hit target 3?
No, sir.
Yeah. Those are in, oh yeah, so the other part of this, the state algorithm, which tells you direction, you know, what state it's in, and the targets are not correlated, you know, they're not matched up. Like, they don't, just because you hit state 3 doesn't mean you're gonna get into, you know, state 4. Just because it drops down below here, typically if it gets below, you know, the third target and holds below there, then it's gonna go to, you know, state 4. But they're separate. So, not always the case, but most of the time.
Pull down your chart, I think something else shows, on the right-hand side, you're,
Further down below.
yeah, go on further down.
Chart.
Right there. You're saying there on state 2, you're only having a 2% chance of any gain, on state 2, whereas on state 8, you have a 9% chance, 9% reward,
On average.
risk reward.
Right.
And so maybe playing state 2 is not wise, whereas if going into state 8, that's a better trade. It's good.
And that's I think kind of exactly what Josh is showing with that state 2 is I'm typically if SPY or SPX enters into state 2, I'm typically not going to buy a put or buy a call right off the bat. I'm going to do exactly that. I'm going to watch it. And if it stays at that range bound for a while, now I'm watching those outer bands. And once it breaks to the downside or the upside, that's probably going to give me that's going to give me that indication of like, hey, you know, maybe I want to buy some calls or buy some puts or do some protection. I'm typically not going to trade because again, I mean, I want to be in and out of the trade within 9 days if I can, great. But that state moves so fast on average that it's really, I don't think it's going to give you a good price indication.
Well, but 2% risk,
Right.
I mean, reward for the risk, that's not worth it.
Right.
Whereas, in 8, 9%, that's something to
Right.
consider.
And you can see it, you can see a lot of things coming about, like, trade war in China. You can see certain things kind of piling up, and if that starts to dip down below, and breaks down below that target 3, and now it looks like it's going to go bearish, now there's a bunch of other things within the market that seems to be aligning as well, so we'll kind of set that
So the state 8s that we're seeing there, going back in history, that's part of that depth of the complete cycle that we've seen. And so if we hit state 8 going forward in a recession, or whatever it's called, pullback, then we ought to be looking for state 8 type of trades instead of just state 2s or 4s, because the risk reward's not there until.
Yeah, I would think so. I mean, you want it
To
so,
this
like,
point,
market
keep
direction.
Keep scrolling down for just a minute. Look at where it goes to state 8. I'm guessing if we looked at the chart where we were showing the targets, looking at that, we'd be much more inclined to go for state 8 target 2 or 3 than we would state 8 as a recovery point.
So can you go back to December, whatever that is, 18?
This here,
Yeah, let's look at that state 8.
December 18th.
Go to that.
Oh,
This is a, like the 26th, fourth was the bottom.
24th was the bottom.
Yeah, back in November.
Yeah, but we want to see where,
You'll see the target still, yeah.
Wow.
Yeah.
Wow.
So your targets are
2330.
Can you pull it back to
2, 4,
October?
4, 4,
Yes.
4, and 11%.
So that was the low, obviously.
Yeah.
But just like every other mistake, I just wait personally to see which way it breaks. So you see right away. So once it, state 1, state 8, state 2, like getting in the first day, you want to, because I've seen too many times where, it is a false signal. It doesn't happen all the time, but it's frustrating, where it goes state 1 and then next day it's state 2, and I'm like, so I give it a day, see what happens, day or two. But, this is like a typical move. So, tried to get to 3 and then bounced off. But just like, the bearish stuff happens a lot faster usually.
Well, it actually went into a pennant onto day 3 before it actually broke that pennant and dropped through your 2,600 support level.
Yeah.
What does October, November look like if we walk down through 246?
Yeah, we can look.
Scroll down, right?
Oh, yeah, you can scroll down.
Well, you
You
can
can see right here.
do it here. Right, well,
You
you
were
have
in,
the entry
you were
day,
in
this
two
is the
in
day
early
before.
October.
Right, yeah, so then you can see state 2, right?
You've been working up to this.
Yeah. This is the day before the entry on that. Let's go back before.
Before you get off that
So-
one, I noticed
Sorry, it's going to refresh.
you had your targets there going negative, right,
Yeah, for bearish.
for bearish, but on the bottom, next state projection, it had 90% chance of going into state 7.
Right.
It's kind of the opposite.
Well, it's a pullback. So like anytime it's in state 1, it's like 90% it's gonna go into state 2. Like the
No, but you're in state 8, your targets are lower,
Mhm.
right, but the state 7 is a 90%. Isn't state 7 a bullish state?
Like he's saying,
Yeah.
it's almost like a state 2 is a state 1 with a temporary pullback.
Mhm.
State 7 for state 8 is a temporary pushback higher, and then a continuation to the downside is how you'd look at state 7. Now, like Josh said,
You remember
I use
what
state,
happened on December 26th?
right. I use state 7 as similar to like your state 2, where if it transitions into that state 7, now I'm going to watch it. And if it breaks above its targets or breaks below its stop losses, then that's going to kind of give me an indication, all right, are we switching and going back higher, or is it going to continue that downtrend lower? I probably won't, once it's in state 7, if I've made profit or taken a loss either way, I'm typically going to get out and then kind of see which way it's going to break after that. Because that's usually that slow down cycle, if you will. And it's either going to continue further or it's going to reverse, typically.
So, I mean, the beauty with this is it gives you the general trend direction, and then it gives you, you know, prices that you're looking at. You know, you're watching prices. So, so that's what I like about it. So the average move, you know, you can, that's your like base assumption, but every day you're looking at the targets, and like here, you know, like, okay, on this day, you know, this is you know, bearish support and this bearish resistance. So it gives you every day, you know,
Index
where you're
the
looking
date, index the date with the plus sign, show what happens.
The next day?
Yeah.
I'd be more interested in the 23rd too.
It was,
Do it again.
it's going to go for a while. I think it stays in
Yeah.
state 7 for at least a week, I think.
Well, it takes a while to get the seven.
Right,
I
that's
remember from the earlier.
So even though it's kind of shifting a little bit, and it's possibly going to come all the way back up, I mean, you can see your prices aren't really changing, but typically, you know, depending on how aggressive you actually want to be, you're either still, I mean, you're still in the position with some stops, or you're out of the position depending.
What did it say, what were the state 7 percentages on the 23rd?
The same.
Yeah.
They stay the same throughout the state.
I think you can see, I don't know how long it takes for it to shift.
We around the time Powell had that press conference.
Right. I don't even remember. So let's see, this is January 11th, and we're still in state 8, but it's almost come all the way back up like Josh was talking about. Now we're getting back kind of in this little range here. So
that's like so we did like the reverse with state 1, where it ran all the way up and then comes back down. This is doing the same thing, where it runs all the way down, then comes back up, and then it'll transition. That's why we have the targets in there, saying like, okay, this is where, you know, moderate, conservative, moderate, aggressive targets. So, and you see the support and resistance, how it works, and then, you know, it's breaking back through, and then, you know, you have a big gap here, and then it'll eventually transition. It doesn't correlate exactly like, okay, it broke back through those targets on the way up. You know, the state modeling is still independent of that, so it'll just keep those targets until we get there.